Okay, hey everyone, welcome back. All right, it is Wednesday morning. We have just had the CPI this morning, which was kind of a bit of a non-event. I mean, the CPI was a good number. It was a cool reading. That's obviously what the market wanted to see. Let me make sure here that everything is working. There we are. Great. Okay, perfect. And you have to think that some of this response was priced in yesterday. Obviously, the PPI number, which is not always a precursor to the CPI, but in this case, I guess people sort of saw the writing on the wall and, you know, decided that they'd start buying ahead of the CPI number. Not that we're not having another bullish trend day, but you'll notice here, SPY is rapidly approaching the SMA here. So let's see, the SPY SMA, we have the 50 SMA, which is at 544.08 and or 07. It's right there. You can sort of see it. And if you look right here, it has just gone through it. Now, here's the thing, as we've all seen with SPY SMAs. It's very rare do you get this sort of clean break. So you can look back here, right, and sort of look at the, what day was this? This was way back when, July 24th, right? You had this sort of breakdown and it tried to break through the 50 SMA. You had around 1, 2, 3, 4, 5, 6, 7 days before you finally got that break. So here you have kind of a natural resting point for the market. I doubt very much you're going to see this kind of rocket ship boost straight through the SMA today. Stranger things have happened. But this is sort of where I'd be a little bit cautious with longs, because you just broke through the 50. It looks like we're in a bullish recovery here. Almost all of the drop that occurred way back and on the 1st of August has been erased. The gap has been filled. So there certainly is a much more bullish feeling in investors and in institutions and retail everywhere you look than there was. However, we just broke through that SMA. There's plenty of room upside here. So I would, if you're going to go long, I would keep this position size small. Wait to make sure it's confirmed. How do we know it's confirmed? Well, you'll see tomorrow. Tomorrow, does it stay above that SMA, or do we retrace below? How do we close today? Those are all the things I'm going to kind of be looking for. So my pick last week was PLTR. And when I picked PLTR last week, for all of you, the stock was at $27. And here, I'll go to PLTR right there. So you have gotten, if you stayed with this stock, or you had one day you would have kind of drop August 12th, but if you had stayed with this, you got around 5 days of bullish price action. This thing has gone up almost, I don't know, 20% since we picked it. So buying calls, buying stock, and it's certainly cheap enough to buy the stock. All of those things, PLTR would have been a good pick. So we have our pick, PLTR, and we have SPY. My current positions, by the way, I have 50,000 shares of NVIDIA, I have 10,000 shares of SMCI, I have 25,000 shares of Amazon, and I have 30,000 shares of MSTR. So I certainly have a lot of long shares. And if I were looking for a hedge, which I may, I'd be looking to see if Tesla drops below 200, and then I would probably short that. All right. If anyone has any questions, by the way, post them in the YouTube chat. You can, if you shoot me a message on Twitter, it might take me a little bit longer to get it. And if you're in the one option chat room, you can, shoot me a message there too. All right. So let's take a look here at what is strong today. Oddly enough, I really like crowd. Now, obviously, crowd has had its issues, right? We've all seen that. So here we see, look at crowd. This is the bottom, right? This is when crowd will drop down to 200 down here. And this thing has rebounded off the bottom. Earnings are what, 820. Okay. So you've now have a gap fill right here. You're still well below the SMAs. Still a long way to go before it gets anywhere near its highs, which is all the way up here, right? So you're looking at almost $150 of space there. So crowd is one that I like. It's good for, and I just in the challenge account went long that, took profit this morning, might take profit again. And that's one I like. Another one I like right now, I like NBO. It's that up there. And NBO here, you see it just broke through the 100 SMA. And I'd be a little bit cautious here because while this looks like it's starting to confirm above it, it has been having trouble there. And, you still have a large gap here to fill from July 16th down to July 17th. And then you have the 100 SMA above at 137.17. So I would, be a little cautious there, but out of the, Lilly is doing well out of these type of stocks, which tend to offer some protection against the market because healthcare is not always directly correlated. That is a good pick. I like Netflix. And I'll show you Netflix here. Netflix breaking right through the 200 SMA right here. Breaking right through the 50 SMA right here. Strong upward move off of its lows. I mean, this is just a nice steady incline. It's a little bit extended, a little bit. All right. So going long Netflix, while I like it here, it's not the worst thing in the world. If you want to wait for a pullback, if you don't get it, you don't get it. You miss it, fine. But I do like Netflix. That's another one I like. And then the third one I like right now is Apple. Keep in mind that you have retail numbers coming out tomorrow morning. Now, normally it's like, well, who the fuck cares about retail numbers? We never, ever talk about retail numbers. So why are we talking about retail numbers? Well, apparently, the Fed now all of a sudden cares about retail numbers. So because the Fed cares about it, we care about it. Retail numbers are coming out tomorrow at 5:30. Since the CPI was cool, retail numbers coming out tomorrow will just constantly increase the narrative on those rate cuts. Now, the narrative is no longer whether they'll cut rate. It's almost 100% priced in. They're cutting rates in September. And if they don't, I'm sure you'd have people with pitchforks and torches at their door. But are they going to cut 25 points or 50 points? Anyone thinking they're going to cut more than 50 points is insane. If they cut 50 points, then you'll start seeing a real market reaction. And so now the economic numbers are really more kind of geared towards how much of a rate cut will there be rather than will there be a rate cut. For NBO, could you argue that a couple of bullish candles and the assumption that the gap will be filled is enough of a reason to go long? Yeah, I mean, that's why I'm pointing it out, right? I mean, you certainly can. I don't like to generally anticipate ahead of a confirmation. However, here you do have a pretty strong bullish narrative going off of bouncing off of these lows. So yeah, I kind of like this setup. I like it more if it cleared the gap, but the problem is once you get into the gap, then you're worried about the 50 SMA as well. I mean, so if you wanted to be a completely conservative technical analyst on this stock, you'd say, okay, I'm not going long until I see this breach 138, 139, right? And that's $4 or $5 a buy. That's a legitimate argument. You want to see the gap being at least half filled. You want to see the 50 SMA broken and confirmed. Fine. However, if you're day trading it and you are looking for some strong gains before it even gets there, you actually have a decent mental stop here at the 100 SMA. Obviously, if this thing retreats or closes below the 100 SMA, you'd be out. So that's something to consider. Do I use Bitcoin for relative strength of MSTR? Not really. I mean, it's correlated, obviously, right? If Bitcoin's up, MSTR is up. If Bitcoin's down, MSTR is down. It's not 100% correlated. It because there are going to be days where Bitcoin is up, 2,000 and MSTR is only up $3-4. And there are days when Bitcoin hasn't moved and MSTR is down a bunch. So not really on the relative strength thing. It's just more of will MSTR hold at a 130 price point, and as long as Bitcoin, Bitcoin, since it is correlated, stay roughly around 60,000 or above, it's a pretty safe bet to hold that and maybe get it to 145. And that's sort of what I'm looking for. That's a little bit of a longer term swing trade. Oh, thank you for the compliment on the post on institutions. I hope that helped some people. It's kind of amazing, and I saw some comments of people still arguing that retail traders are more than 20% of the liquidity in the market. I mean, seriously, how insecure do you have to be to actually need to believe that your trading and that of your brethren traders out there in arms are making a substantial impact? I mean, you have to seriously need so desperately to find meaning somewhere to truly believe that. I mean, it doesn't matter. Who cares? All that matters is whether or not you're making money, and institutions don't care whether you're making money or not making money. Like I said, yes, they assume you're losing money, and people who are out there screaming, oh no, retail traders need a hell of a lot more than 20%. Trust me, you're one of the ones losing money. So, resign yourself to the fact that we are eating the scraps that fall off the table. And we are following those breadcrumbs, and enough of those breadcrumbs make a decent meal. That's fine. I'm fine with that. I have no issue with that. They are the ones with hundreds of billions of dollars. They're the ones who are moving the market. I am the one who is just looking to see which direction they're moving it, and is there time for me to piggyback on it? That's all. There's no other, I don't care about whether or not I'm moving a market or not. I care about whether or not I made a profitable trade. That's all that matters. So I really kind of get amused when I see people making that argument. Where'd you get those figures from? They're pretty common figures. It oscillates. Obviously, there are times where retail could get up to like 25%, and there are times where it dips to 15%. On average, it's 20% of the liquidity. But if you have trouble believing that, then maybe seek some help. There's help out there, I'm sure. People to talk to, people to confide in. I want to hear your story about how sad you are. I see people using the EMA 8 on the D1 and saying it's support or resistance, but I'm not sure if saying this is D1 support or is curve fitting since it has such a small data aggregation and it is an EMA. I agree with you, John Tiger. Look, what do I use the EMA for? It, you know, here, let's see here if I can, EMA 8, right? Here's your EMA 8. There, I just put it on the chart for NBO. Now, look at the chart for NBO here, right? And you see the EMA 8. You'll see if you follow the kind of, just look at the candles, right? And you follow the slope of this upward trend recently in NVO and look at the slope of the EMA 8, you see that they're pretty much in line, which means it is not overextended. There's no overextension on the stock. Now compare that to Netflix. Now Netflix, granted, I still think is a good pick. Look how steep this slope is here, right? And look how steep that is. This is an overextended angle on this slope. You know, if you look at this downward trend, you can pretty much peg the price action around the EMA 8 as it drops. And that makes sense because the EMA 8 is, you know, I tend to like the 15, not the 8. It gives you a little bit more of a extended view, but the 8 also widely used. It's not exactly acting as support or resistance. It's just sort of a trend confirmation here. And you're looking at the angle of the slope, and look at the angle of the slope down compared to the angle of the slope up. This is an extension, right? And so look how far you are from this EMA here on today's price action. So here, you know, you see whenever it gets too far away from the EMA 8, it's going to kind of course correct and go right back towards it. Look at this distance here. So is there, you know, can you be overextended for a long time? Of course you can. There's plenty of examples of that. You know, NVIDIA is constantly showing you can be overextended. But it is a good indicator of, yeah, I can wait for a pullback here if I want to go in. That's all, you know, and that's sort of what I use it for. I don't really see it as strong support or resistance. IBM looking to move above the algo line. Well, let me take a look here at IBM. There's not much of an algo line here, so let me just put it on here. IBM here and IBM. All right, so here's IBM. I mean, what I'd be looking more at with IBM is, okay, it's obviously above its SMAs. It's obviously recovered from its drop here in August 5th. But take out this sort of aberration here of August 2nd, 5th, 6th. This is a compression, a price compression. What you really need to see is a break. And, you know, to really be confident in that break occurs at around 190, 195-ish if you take out this one big wick here. So I would put I'd put an alert. Put an alert in at 195 on IBM and, you know, see how that goes. We're getting a little bit of a pullback, by the way, in the market right now. See here, there's SPY. And you're getting this sort of drop, but VWAP is, and I'll put VWAP on here. You probably might, you know, VWAP is at 542.44. But remember I said about that SMA on SPY? And I said that it's not going to go right through it and just keep on going. You're going to get it come back for a retest. Well, yeah, you're going to have it come back for a retest. So let's go here on the M5. Okay. When you trade, do you get changed? Like, how would you go to the traditional jobs or stay in your pajamas all day? Well, as you see, I'm dressed. No, I mean, I get up, have coffee. Unfortunately, because I live in fucking LA, uh, I have to be up at 6:30 in the morning or something like that. Um, 1 second here and click on this so I get some streaming questions there. Oh, good. I get all the questions here. Great. Good, good, good. Okay. So yeah, that's what I do. Um, but you're working from home just like anybody else. Steve M said, "Can you suggest any leap call?" Sure, why not? They're not that complicated to do leap calls right now. Look, best two leap calls right now are Amazon and Nvidia. It depends on how you want to use the leap calls, though, right? Because let's say you want to do a leap call on Nvidia, right? And so you want to go to, I don't know, August 20, a year from now, August 15th, 2025. Okay. You want to grab the $90 calls and they're $41. So 4,000, $4,100 for a call. Um, are you selling calls against that? Because if you're going to sell calls against it, NVIDIA is a better bet because you get higher premium. So, you get that for $41. And then right now I'd sell, you're not looking to make a huge amount, but you sell the, 125 calls for 15 cents or whatever. And you do that every single week. Every week you just sell, if you bought 5 leap calls, you sell 5 weekly calls against it. And so now you're doing a fig leaf. And that's how I would do it. But I would look at stocks like Amazon, like NVIDIA. Is NVIDIA a year from now, as leap calls and on this whole strategy always assumes you're not going to have some sort of market crashing event. So let's assume the market is just going to continue and, SPY a year from now will be at 610 or somewhere around there. Well, if that's the case, then obviously Amazon will probably be over 200, NVIDIA will be over 150, and you'll do fine on those leap calls. And if you sell calls against them every week, then within 6 months, you'll have a large portion of your calls that you purchase already financed. So, and then it's a lot of profit at that point. So that is sort of one thing I would do if you're looking at lead calls. Okay, running through some of these questions here. Pete's outlook was pretty negative for the next few weeks. Do you have the same outlook? Market has been moving steadily up and didn't take much back to the 100 SMA 150. Pete's outlook was kind of bearish, but it was always caveated with if you see this, if you see this, if you see this, and then of course he changes his market perspective. So from my perspective, as long as we stay above the SMA that we broke through, which is now quite a distance away, right? So the 100 SMA that we broke through is all the way down at 530. He was bearish before it broke that. Now I'm looking at the SMA 50 at 544. I think it'll take a couple of attempts to try to break that. But I don't think Pete, if he saw this current setup, would be bearish anymore. So I am leaning towards the bullish side, but we are up against an SMA. And here you see, just like last time, you're seeing a rejection off that SMA right there, right? It broke through, and now you're seeing a pretty solid rejection off the SMA. So you have to wait. You have to wait and see if how steep this rejection is going to be, and will it continue? But thoughts on SPY tomorrow? Right now, bullish, but depending on how we close today, obviously, I'd like to see us close in the green. And you have some retail and jobless numbers in the morning that are going to affect things. But overall, it's bullish as we attempt to break through the SMA. I think you'll see, like I said, a couple of days perhaps where you're not going to get just a straight breakthrough and off it goes to the races. It's going to be more of a process of test, retest, retest, back and forth until finally you get the breakthrough that, will kind of give you the confidence that it's going through. But, volume isn't extraordinarily high right now. It never is in August, and it currently on a CPI day is rather low. Let me go back here. I'm trying to answer the questions from all the different channels. Could you explain Pete's mantra that we don't make money on the breakout? We make money on the follow through. Not sure I understand what he means. What he's talking about there is sort of what we just talked about before, a little bit with NBO. And it's this. Everyone wants to anticipate the breakout, right? And so nobody likes waiting for confirmation, because the feeling is once you get that confirmation, you've missed it, right? So if you're looking at, something like Tesla, let's say you want to short Tesla, right? It's weak today. It's weaker than most other stocks, and it's down $7. Now, if you're looking at the technicals, you're going to say, all right, I need to see it break below 200, and I need to see it confirmed below 200. And once it is, then I'm going to short Tesla. But if you didn't want to wait for that confirmation, then you'd want to try to short it before you saw the breakout, and here it would have paid off. The problem there is that it's called confirmation for a reason. And a lot of times when you try to front run the breakout and anticipate it, and you're wrong, you get caught. But now you're caught in a kind of a psychological mess, because you're still in your mind thinking, no, this thing is destined to break down. And so it requires even more evidence to show you that you were wrong about your breakdown anticipation. And you hold it, and you don't get the breakout you were looking for, and then you're fucked. So it really is this: I'm going to give away the profit of the breakout that I missed, but I'm going to get the follow through on the breakout because now I'm more confirmed. So it's really more about, am I going to be satisfied with a higher win rate and less profit, or a lower win rate, more profit, or rather, am I happier gambling or taking more of a sure thing? And that's kind of where the difference is. All right. Questions. Let's continue. So many questions. I don't even have time to go off on a rant. All right. Do I think AI or AGI will have an impact on this trade, on trading, like it might on other jobs, if it might happen? Yes and no. Here's the thing about the AGI. There is no AGI yet, number one. There's no generalized artificial intelligence at the moment. And how far away we are from that is from debate. Now, large language models are only going to get you so far. Can you get AGI from a large language model? I'm one of those who doubt it. I think that you need to go in a different direction for it. Can large language models help with your trading? Again, probably not, right? Because all it's really doing is relying on the data sets it's been trained on in the past. So what I think AGI does great, not AGI, AI does great, not even, I wouldn't call it AI, but trading and news breaks, they're filled with a lot of shit that even if you are extremely educated in geopolitical and in trading terminology and all of that, you will come across shit that you just don't understand. Well, having ChatGPT open, for example, is a very easy way to just quickly type in or copy and paste in and say, what the fuck does this mean? And can you translate this like I'm 5 years old or whatever, and get the answers? That's actually kind of invaluable. And I wish more people would use that, because half of the shit that I see people asking questions about are things that you could just type in there and get, really, really simple and fast answers. But I don't think you're going to get effective algos. When institutions use their algos, they're using it to respond to news events, price points, but they're basing all that on an immense amount of information top level data scientists writing those and coders writing those algos, and they're doing it on a broad, large scale. I mean, here's a perfect test. You can, the 3-8 cross, right? I mean, you can back test that and you'll be like, wow, I would have 85% of the time that works. Great. Okay, so write an algo that every time you get that cross, you buy, and when it crosses back over, you sell, and see how well you do. It doesn't work, right? There's a huge delta there between what the back test is going to show you and what it actually does in practice. It just doesn't work like that. So I think we're kind of far away from that. Also, the number of factors that go into trading, psychological factors, and taking everything into context and looking at it. Like, for example, right now, I'm looking at SPY, I'm looking at this drop. I'm seeing it hit VWAP, right? So I see a rejection off of the daily 50 SMA for the S&P 500 ETF. I then see that rejection go down to VWAP and get stopped there. Now, last time I saw that rejection, it didn't get stopped at VWAP. It just kept going. It was a huge rejection off of the SMA, which then recovered. Here, I see the rejection, but not enough to drive it down and even put SPY in the red. That tells me that we may, in fact, retest that SMA again today. Write an algo that can do that when that is just one of thousands of different components and variables that go into trying to analyze price action and the price movement. Like, that is, for me right now, a very important indicator. Now, it's not always an important indicator. It's an important indicator for me because 4 or 5 days ago, you had a rejection off the 100 SMA, and when that happened, you blew right through VWAP. Today, you have the rejection off the 50 SMA, and you stopped at VWAP. That is one of a million different little things that go through your head when you're trading to say, okay, I'm going to hold off and wait. Just like at the beginning of this stream, I told you all I wouldn't go long right here. And look what happened right after I said that, right? All of those things really hard at the moment to program. 5 years from now, at the exponential rate that technology is increasing, if humanity's still here, sure, I think it probably would be at a point where you could. You look at SPY pre-market to help gauge which way the market will go intraday. Yeah, I mean, I wake up at 5:30ish, whatever, and I'm seeing how the market's doing. But it depends. There are certain stocks pre-market you could look at. They have enough volume that's going. Nvidia's or they're going to tell you how it may do during the day. But overall, I mean, I'm generally looking pre-market to see if there's any major divergence. I look and I see SPY is down $4 pre-market. Okay, that tells me something, right? But I look and I see SPY is down 50 cents or up $1 pre-market. That gives me very little indication of where the market's going to go. Back over to this one now. Following bi-directional calls. Okay, I am continuing with the $12,500 channel. I just am not being very good about updating the what do you call it? The journal. That's all. But the account is up right now, and it got knocked down, and now it's back up. Like I said last Wednesday, I anticipate by September, which would be about the 6-month mark, half year, it'll double, right? So 100% return on your money in 6 months in trading is, I'm going to guess, a pretty good thing. That's pretty much where I'm pegging that account is going to go. But at the end, every trade will be outlined, journal, talked about, explain why I did this, why I did that. And, you'll see how there are times where the account got knocked down to like almost 6,000 and times where it was at 23,000. It was like literally right there. So I will outline the whole thing. All right. So someone asked about if I was in Europe and I could do CFDs, would I use them in, exchange of instead of options? I mean, CFDs are much more straightforward, right? But the risk they come with because of the leverage is probably a little bit too oversized. And I do like the kind of the ability to use options for more things of like hedging and, options come with things like time decay and volatility and all the Greeks. And, so CFD is a lot more straightforward. I'm probably going to say I'd still use options, but I would caveat that again by saying it's more of a comfort thing than anything else. It's just because I'm sure if I grew up in the UK, I would be using CFDs and go, no, I would never use options. Those are complicated pieces of shit. And why would anyone want to fucking do that? Okay. Can you talk about when you buy directional calls and puts when you trade iron, condor, I think you're trying to say? Can you expand on that, Yang? I'm not sure exactly what you are asking. Okay, going back. When would you put a credit spread as opposed to a debit spread? Well, I typically don't like credit spreads. There's a lot more risk for the reward, but I don't like using call credit spreads at all. If you're going to use a call credit spread, then just use a put debit spread instead. It's going to give you a lot better risk reward return. But I do like using credit spreads when I'm using out of the money bullish put spreads. So, if I'm looking at right now, let's take a look at a stock that might have a good out of the money bullish put spread at the moment. So let's say, a stock like Apple, right? I like Apple, and Apple has some support. So let's put up Apple here, Apple, right? Apple. And by the way, I have the relative strength meter running right here, so you can see all the stocks today that are currently strong crowd, right up there towards the top. Chipotle, I mean, the CEO. How bad of a CEO do you have to be at Starbucks that when you are fired, the stock goes up 20%? I mean, how must that feel? I mean, but then again, didn't this guy come out and say that he refuses to work after 6 p.m.? I mean, fuck off. Really? I'm not going to say they have shitty coffee. I'm not a coffee snob. It does its job. But I mean, it's not like their coffee is the greatest coffee ever. Still, that was a little bit of an overblown reaction. Anyway, so Apple, you have support at go to the daily chart here. Right there. Okay. So I am looking at 216.40 as support on Apple. And then also I see here you have a bit of a gap at 217 that Apple hasn't yet filled in the downside. So let's say I was looking to do a bullish put spread on Apple, right? And I wanted to go out 2 weeks to August 30th. And I can even probably see if I can go down to the 210. That's going to give me 25%. So 215 to 210. All right. So I'd have to go, you'd have to go to September 6th. And you'd have to do the 215, 210. So you're selling 215 and you're buying the 210 puts that expire September 6th on Apple, and you do that for $1 credit. That is how I would structure a credit spread. I would do the sell the 215 puts, buy the 210 puts on Apple, expiring September 6th, 2024. Get $1 credit for that. Do not take less than $1 credit for that. So put it in for $1 and see if it goes through. And then as long as Apple obviously stays above 215, you're going to get, you'll get paid. You do 10 of those, you'll get $1,000 profit on that, right? So, and the reason I like that too, because if it did break, if it broke through the SMA and your credit spread was in danger there, I'd quickly buy back the short puts and let the long puts run, because you're going to, if Apple's dropping below those SMAs, it's probably going to keep dropping, and let the long puts run until I get into profit. So that's how I would do that. Okay. What do I think of a 2-week call on GDDY? GoDaddy? I don't fucking know. I think right now you're getting, I wouldn't go long on it now. I mean, today is not very relatively strong at all. I mean, look at GoDaddy here. Look at the relative strength index here. Let's put that up. Okay. Real relative strength here. I mean, on a daily chart, the real relative strength index is strong. On a 5-minute basis, it is not. It is weak. So it is not strong today. In 11.7, so its earnings are pretty far out. I mean, look, obviously it's a very bullish chart, daily chart on this. It's a little extended, but it's still a good chart. I probably would not recommend. I mean, there are better ones to do 2-week out calls on for this. All right. Moving on, back and forth. Oh God. Let's see. Can you comment on these large red candles we've seen on SPY today and Monday? Wondering what the market makers or algos are doing. What the hell are they doing? Why not the other direction? Why not indeed? Limey bastards! What the hell? We don't want your long candles. Get the hell out of here. Yes, indeed. These are rejections. Just rejections, you know. We all know about rejection. I mean, I remember. Let's see. Today's long red candle was brought to you by the SMA 50. That's all. That's all it is. Like I said, there's no reason for it to blow through it just right now. It was stopped dead in its tracks by the VWAP. VWAP said, go no further, fuck off, get back to where you came from. And maybe Spell will say, no, I am crossing here, good sir. I will continue my journey downward. Or perhaps it will sneak back up to the SMA and go, surprise, I've returned. I don't know what it'll do right now. I just know that it was going to get rejected on its first go around because, you know, it try again, but not on the first go around. Certainly not with 3 barrels, it can't. So no, it's not the market makers. And by the way, the market makers don't have as much power as you think they do. They're just juggling. That's all they're doing. They're trying to balance calls, puts, make sure everything stays simple. They want to make sure they are as delta neutral as possible they can be. So they're just not, you know, this is more about, you know, how much JPM had a sell in on the futures when it hit the damn 50 SMA. That's all. I mean, that's what these candles are about. They're, you know, they're sell being triggered, and then, you know, you get buying going back in, selling only up to a certain point because we still have kind of a bullish backdrop. So we'll see. We will see. What else do I have here? When do you expect to release Wiki 2.0? You know, writer's block, all that. I mean, I just wanted to get that first article out. And now that I did, I expect to continue writing the Wiki 2.0. I expect everyone to continue ignoring all the caveats about don't use this until you've mastered Wiki 1.0. But it is what it is, but I will continue it very soon. In fact, someone in the chat room earlier today pointed out a topic that I was going to start covering, and that it was the idea of, you know, when is it sort of the difference between buying a dip or catching a falling knife or FOMO, or like there's such a fine line between them that it's hard to kind of differentiate. But there are things that you can look at. For example, I bought an insane amount of NVIDIA on that dip down to, it was like at 101, right? And everybody, I mean, my God, my Twitter lit up with, oh my God, technical, blah, blah, blah. It's not going to, you know, it's free cleared out to 92. Yeah, okay, great. Thanks for your advice, Walmart. But I had technical reasons why I bought the dip there. And so I figured, well, that's a good Wiki 2.0 type post to go through that. And that is what I will do. Impressed with how you handled 1.5 million down day last week to getting in some profitable trades soon after. Any tips on how to separate emotions from trading and not get paralyzed on big down days? Yeah, that, you know, look, that would have typically in the past when I started out, that, I mean, it wouldn't have been that much, right? I wasn't, you know, able to have a $1.5 million down day, but that certainly would have, that type of drop would have knocked me out, you know, emotionally. But you gotta take a little bit of a page from long-term investors here. And there's one thing they obviously do a lot right. They make you know, money on long-term investing, but it's not a career for them. It's not something that they'll you know, something to retire off of, not something that they replaces their job. But one thing they are generally, and other than in times of extreme market movement, is removed. They are removed from the market turmoil because they basically have their positions. They check them maybe, you know, once every 6 months, and sometimes it might be down a bit, sometimes it might be up, and you know, sometimes their portfolio might be down 10%, 20%, but they know in the long run they'll be fine. The point is that they remove themselves emotionally from what they're doing. And I know I can look back and just look at the statistics and say, all right, if I just continue to do what I'm doing, I'm going to make money. And there are going to be occasional moments where I have this drawdown or I have this type of drop. But overall, it's going to balance out and I'm going to be fine. And as long as, you know, it's not, you can't, I'm not going to lie, I'm not a robot. You can't, you know, look at that and be like, oh, today was a happy day. No, I wasn't fucking happy. I went outside and smoked half a pack of cigarettes. But I did make my decisions. You know, you can experience whatever emotions you're feeling, but you always have to ask yourself when you make a decision, am I making this decision because of my emotions or something else? And you don't want, you know, the less your emotions have to do with emotions, the better. So, so let's see. Someone asked me about volume price analysis by Anna Colling. Yeah, I looked at it. I mean, obviously, it looks at, from what I remember, the sort of how they look at volume spikes, whether or not it's the beginning or ending of sort of a trend. It looks like divergences, price moves in one direction, volume doesn't confirm it. On balance, volume can also do that as well. And then there's sort of the volume cluster concept where significant trading volume has occurred and can act. Volume to me is a great indicator, right? It's because it is sort of completely removed. It's not price action. It's just, look, this is how much activity is occurring here. and you can look at the average amount of activity. So what can volume tell you? Volume could tell you how much institutional involvement there is. When you look at certain stocks and you look, okay, it has an average volume of 10 million shares traded a day, and today it's at 40 million. Well, retail isn't doing that, right? Particularly if you're looking at a stock like, it's $150 a share or something. So the institutions are in there trading. You don't know how they're trading exactly, and you don't know the method, but they're in there trading. And so you certainly can look at volume. You can look at, one thing that also helps me on an intraday basis is I like to look at what was the volume on the drops compared to the volume on the green bars, right? So you can get these huge drops, like in SPY here. This huge drops in SPY, they were on decent above average intraday daily volume, whereas the green bars are not. That gives me a slight, I'm not bearish on the day, but that gives me, a little bit of hesitancy before going long here. I'd like to see some green bars with some heavy volume that kind of exceeds the volume I saw on those bars with the drop. Now, some of that volume was because of sell stop already in place at the SMA, and that's where it's coming from. So you got to take that into account. Okay. Moving right along to Starbucks. Someone asked me about, like I said, I think it was overblown, but you did get a lot of analyst upgrades. It's weak today. I would just watch it and see, obviously, if half of that gap is maintained, that's where you can feel confident on something like that. What is the second chat you were looking at? Not YouTube. That is the one option chat room that I moderate that room. So you can see here, this is Option Stalker that I use. I have been a member of One Option, that's Pete's community, for, I don't know, many years. I moderate the chat room for him. I think it is the single, I've been in every single one. I mean, from Ross Cameron to Trade ID. I mean, I've been in all of them. I've done all of them. I checked all of them out. And obviously, I don't have to tell most of you 90-something% of these things are scams, right? Most of them are based on scalping. Most of them are based on stupid, like 3-bar methods, crap. You get very little in terms of real professional traders. You usually have just one person who's claiming to be the professional, with very dubious claims and crazy YouTube. Nothing against Ross, for example. He's a good scalper, but he does some things that the average retail trader can't do. So here in that chat room, it's filled with professional people like Dave W in there. You have Dave Wise, one of the best traders I've ever seen. You have an assortment of professional traders. You have great moderators. It is a focused room that just focuses on the stocks, on the trades, on the analysis. And then you have sort of Option Stalker here, which, everything from the search parameters to the charts to, all the new trade signals that are being built in here. That's why I tend to spend my time there. So that's the other room that I was referring to. And I'm also streaming on the other YouTube channel, RealDayTrading. So anyway, okay. Everybody loves somebody sometime. Make money sounds a bit like profit taking to me than entering, but I see what you mean. Okay, it's not legit. No, it isn't legitimate until we get a rant, and there's so many damn questions, and it's hard to get a rant in. All you people with your questions. So I have been trading since I was 14 and now profitable 18 because of you. Miller, congratulations. I am extremely happy to hear that. And if you are a profitable trader at 18, I have no doubt you are going to be a very successful person, because that means you have mastered at a very young age something that people have been trying for a long time to do. And trading, as I've always said, is going to be one of the more difficult things you can do. I've done graduate school. I've gotten to, it's equivalent to going through 3 years of law school in terms of learning how to trade properly. The only difference there is if it was just pure memorization, if it was just pure learn the rules and this is what you do, so many more people would be able to do this. So many more. Kind of like poker. You think the rules are chess. The rules are not that complicated. It doesn't take long to figure them the fuck out. But the mindset part of it, that is what is going to fuck you up every single time. And for you at 18 years old to be able and to be a profitable trader, it means you have mastered to some degree that mindset. And to do that at such a young age, extraordinarily impressive. So props to you. And I'm very, very glad to hear it. Do I teach my son my style of trading, or are you letting him find his own path? Well, I mean, and I'm certainly teaching him how I trade, but he doesn't trade per se. He's just, he's working hard at Berkeley and he's going to start his sophomore year soon. And he's just taking his money and he's investing it. But he's kind of like, okay, when I tell him, hey, you might want to look at, getting back into, selling these shares and get back into NVIDIA now or do this, he'll look at it and then, kind of make adjustments. So he's kind of adjusting his portfolio, but all the money he earns from his job, from everything he does, he just kind of puts most of it into the market. Something that if most of us did when we were in college, we would be, life would be very different for a lot of people. Okay, going back over here now. What constitutes confirmation? There are a lot of things that can be considered confirmation. Tons and tons of things. But it's kind of different for different scenarios. I mean, think of it this way, right? Let's say you're dating someone, right? And you want to does that person like you or not? And is this going somewhere? Or are they kind of, and you start judging every little thing, right? As confirmation of that. Oh, look, she's texting back within 10 minutes. Or I asked if she wanted to Friday and she's free. And, or, you start looking at you read into a million little things to give you the confidence, the confirmation that this person is into you. And on the other side, the flip side, you also read into a million things that suggest that maybe they're not into you. And so your brain starts to spin out of control that way. So obviously, the less subjective those things are, the better. So, let's look at SPY here as an example on confirmation. And let's say you are dating SPY. Okay. Look at the daily chart here. So here on August 6th, coming up, 100 SMA, barely hit it. Bam, rejected. Okay. No confirmation there on a bullish trend yet. August 7th. All right. Going to go back up again. And bam, rejected again. Nope, not into you. August 8th. Let's try it again. And this time we're going to finish above it. Okay. All right. So maybe this relationship has a shot. August 9th. We are going to dip back below it again, but this time, nope. Spring right above it. At here, right here, the close on, I would start saying, okay, now you have confirmation, right? August 12th, you absolutely have confirmation. But here you have it because it tried to break down below it again. But it closed and it closed closer to the high above it. Now you're comfortable. Now you're comfortable that this is a bullish trend and that this SMA, this level of resistance was broken. And you see the next day, it stays above it. And now it's staying above the 8 EMA. And then finally, of course, yesterday, off it goes. And now today, you're starting to see the same type pattern, except the level of pullback is not the same when it hits this SMA as it did back down here. So that is an example of confirmation. Now, from there, it goes to how conservative versus how, kind of aggressive you are, right? Like I said before, you can be extremely aggressive on something like NVO or whatever and say, okay, I'm going to go now. Or you can wait all the way through the gap fill, the SMA break, all of that before you say this is the confirmation I'm looking for. So now you sort of have your spectrum of conservative to aggressive, and the more conservative you are, the more evidence you're looking for on a confirmation. So, for example, you wouldn't, a sort of more aggressive person at the end of August 9th would say, I'm confirming a bullish trend in the market. A more conservative person would say that at the end of August 12th. So there is a little bit of leeway there. What was my reasoning for holding off on the longs? Is it light volume? No, it was like I said, it was the SMA Crosby. It was purely the SMA. Okay. It's not close to the range. Still, Yang, I'm really sorry. I'm just not getting your. Oh, I see. Okay. I don't like iron condors, is to answer your question. I don't like them. I like bracketed butterflies at times, but putting it on both ends, particularly if it's expecting a huge earnings move or something. But I don't like iron condors. The reason why is I'm a directional trader. And so I much more, and iron condors also are very restricted on the return. So if I think something is going to be a flat or neutral, that is sort of where I'm, because I'm looking for stocks that are proportionally stronger or proportionally weaker to the market. And an iron condor kind of is the opposite of that. So I just tend to avoid them in general. Okay. I mean, I'll use them every now and then, but advice for the future generation: if the world goes to hell, read your Twitter post in the sixth extinction. I mean, this is my, well, I watch Walking Dead as wish fulfillment. I mean, look, the world goes to hell. I mean, every generation you could see, oh, the apocalypse is coming. This is going to happen. Obviously, there are tons of areas around the world right now that are of concern. But if you're, looking in terms of trading, you're looking to see how do those things impact the market, right? And that's kind of what you want to do. And that's a very difficult thing to do because things will have differential impacts on the market. People make all these assumptions about the impact it'll have, and those assumptions might not be right. One thing I suggest to younger generations, current generations, all generations, is to get off this idea. I mean, for the love of God, there is a fine line between being cynical and being delusional, number one. So I see traders make this mistake all the time. I don't believe that, or I don't believe this, or they're lying, or this institution's this, and this is. You'd be surprised at the utter lack of conspiracy that actually happens at the upper levels, right? And I'm not trying to be immodest about this, but I've been in those rooms. You'd be absolutely shocked at how mundane and how much it parallels everyday life. These people are the farthest thing from the conspiracy, cabals that you think. They're self-interested, but they do not act any different than literally any of you would probably act in similar situations. The so I have very high standards for what I'll accept as true or not true. But you know, for example, like I've written once, if I hear that there's a Congress is about to pass a law or whatever, I'll actually read the fucking thing. Now these things are 300-400 pages long and they're tedious, but I will read them. Then I will look at, you know, on both sides of the spectrum, analysis or people's thoughts on that particular bill. Then I will look at the general mainstream coverage and reaction to it. Then I will form an opinion based on all of that. And even then, do I realize that my opinion is just that? It's an informed opinion, but it's an opinion. What I won't do is look at a meme and go, oh, that's the reality of the world. And I see now that mindset that traders have. If a trader has that mindset, you are not going to correctly interpret the geopolitical situation in the world, how it affects the market. You're not even going, if you're looking at the stock and the price action as the enemy, you're not going to trade correctly. So to kind of get out of that way of magical thinking is one thing I would really impress on any future generations or current generations now. It is a trade, no more whistling, fuck off. Is something that I would really, you know, I'm not saying, okay, you should go and read the 400 pages like a lunatic like I do of the actual HR 41 bill or whatever. But, you know, go beyond just looking at a fucking meme. Honestly, it's so disheartening to see that shit. What do I think about prop firms? I think they're full of shit and you should stay the fuck away from them. That's what I think. I think that, you know, what you think about this. If you are a good enough trader that a prop firm is going to give you money to trade for them, then why the fuck do you need to be with a prop firm? By definition, the people who are using those prop firms are, you know, I mean, for the love of God, just think about it. Why the fuck would someone give you $50,000 of their money to trade? They're not. They're just taking your money. You're the one giving them money. You're the one paying for the privilege of trading for them with you're basically just a factory worker. They're saying these are the parameters. You can't go outside these parameters. This is what you have to do, and you have to pay me for the right to do it. And in exchange, you'll get a certain percent. No, fuck that. They just stay the fuck away from those. They are just no, they're not tenable. Don't do them. Do not. So I hope I'm clear about what I feel on fucking, it's a mini rant there, but on those type of prop firms. So there. Found your wiki this week and just want to express my gratitude for the insane amount of information you're sharing. Thank you. Mr. Damas, I'm very happy that it is helping you, and I hope it continues to, and then I will continue to write more. So, will you survive the zombie apocalypse? Fuck yeah, I will. I have a crossbow. Isn't that all you need? I do have a crossbow, and I would start using it very, very quickly, even if they're not zombies. But I'm not a survivalist, though, so that would be a problem. But I got a crossbow, and you know, in my mind, that's all I need. Okay. One second here. Let's see. I have not. Someone asking me about Qualamagi. I have not. It's Christian, right? I have not. I have not followed that person. I mean, I know they use volume analysis and breakouts and things like that, and I hear they're a decent trader. So I have no opinion whatsoever on their method of trading. But thank you. I'll take a moment and check it out when I can. Okay. Let's see here. Yes, no, the market isn't rigged against you. It just isn't rigged for you either. That is a very important thing to remember and a very important distinction to have. Okay. What do I think is the blue line in the volume, the average volume? Yes, the blue line here in the volume is the average volume. So that there is, it's, the real relative volume. So you can look and see if the volume's above or below average. Starbucks, we cut that. Make my rant about the number of questions. You did actually talk about the chat room. My question was coming from here. I subscribe to both. PA, price action, my biggest weakness. You get together with this talk about PA locked in. It helps me understand. Okay. Yeah. Pick of the week. Pick of the damn week. Last week's one was really friggin' good. Looking. My pick of the week is going to be, it's really a toss-up between Apple and Crowd. I'm going to go with Apple as my pick of the week. And I would take the August 23rd, 215 calls for $7.65 here on the challenge account. I'll get 5 of them right now. Boom. Okay. So there I go. I'm putting it in long Apple using 215 calls for $7.65. 5 contracts. I just did 5 contracts on that one. And it expires 8/23. There we go. There is my pick of the week. And see if I keep that streak alive on those picks of the week there. So the 215 calls expiring next week on Apple. 1 second here. Okay. Let's see. Anything else? Do we have anything else? Go Tesla long, Harry. You love Tesla. It gave you great profits last time. Actually, it did give me profits, but you had to kind of manage the debit spread. And I did the exact same thing today with managing the debit spread, right? Where, well, that one was only slight profit, but Tesla, I was able to buy back the short calls, the short puts, and then just ride the long puts on this drop here this morning, which brought it back into break even. But if I didn't do that, it would not yet be at break even. I'd still, be down on it. So I lost over 150K doing random YOLO, and I feel like a chit. Trying to build my way back with $10 risk now. Although my parents have no living expenses, they have 30K left. Thank you for the wiki. Take it slow. That is, it's a kind of casino thing, right? You go in a casino and you have, I don't know, a few thousand, whatever, and you lose it. And it's even worse when you start and you were up, right? You were up, let's say you go into $2,000 and you get to 3,000 and bam, you lose it. Now there's this urge to make it back. And so you hit the ATM and you're like, all right, now I got to make this money back. But when you're down 2,000, you don't want to go to the $5 table. You don't want to go to the $10 table because, okay, great, I made back 50. I made back 75, and you walk away, and now you're still down $1,925. And so you play much bigger. And what that does is, now this is a situation obviously where the odds are against you, but the mentality of I have to rush in and try to make back all this money. And everyone has the same thing in trading when this happens, which is, and I'm talking, to the person who feels like a chit, but there's a lot of those chits out there. So at least you're not alone. A year from then, they look back and go, all right, if I had taken it slow and accepted those $100 wins, those $200 wins, right now I would have made back 30% of it over the last year of what I lost. But because I didn't, I've now lost even more, right? And you got to think, where would I rather be? I've lost the 30 grand that I had left, or make back part of what I did. You got to just resign yourself. I'm not going to make back everything I lost that quickly. It is going to take a long time to get back to where I was, but you can begin to build it back up. And you have to act as if you did not lose that 150. And how would you act if you were just starting out? Take the lessons you had from the 150. Obviously, stop the YOLOing shit and stop all of that crap, because anecdotal evidence is the death of common sense. There's too many people out there posting how they made X amount of money on these out of the money calls and out of the money puts on this, and that, and they, where their account went up so much. But honestly, it is going to drive you to ruin. So just don't, the only way to trade is consistently profitable. That is it. That is no other way to trade. If you're trading and you're up a lot one month and down a lot in the next month, eventually you will lose. The only way to trade is to be consistently profitable every single month, month in, month out, to the point where you can look at it and say, I can plan paying my bills, buying groceries, doing this, entertainment, going out, spending money, whatever, based on how much I know I'm going to make this month. And it's, give or take 5 or 6%, whatever, one standard deviation, not even. It should not be, oh, I think I had a good month or a bad month. It should be consistent month after month, so that you can look at it and say, my annual salary is this. If you're not doing that, then you will eventually wind up negative. How can I interpret relative strength, relative weakness to a sector? I mean, it's a good indicator. Look, SPY is the best indicator, right? SPY is the best proxy for the market. It's the ETF for the top 500. It's the S&P 500. That is your best for relative strength, relative weakness. It's even better than QQQ, yes, and even QQQ to tech stocks. However, if you have a stock like Apple, for example, and you look at the overall sector, like today, technology sector is down 0.16%, right? Apple is flat today. Okay, but it's not relatively weak. It's not, it's, if you look at the daily chart, it's actually relatively strong. Apple's actually a little green today. Chips are the strongest today. NVIDIA, even SMCI making a nice comeback. But if you have something that is way outperforming a sector, always check also, is there news on that company that is driving? So it is important, but it's not, it's not as important as I would look at for SPY. So let me look back at their earlier question on Google. I'm not exactly sure I can find the earlier question on Google. I assume it is. Let's see here. My problem right now with trading Google is I don't have enough information on exactly what impact, time frame, and likelihood the whole Justice Department probe and idea that they might break up Google, right? That would just be my God, that would just be a landmark type thing. That would be kind of like earth-shattering earthquake. Obviously, you look at the headlines and it looks like by tomorrow the damn thing's going to break up. But the reality is these things take years to happen. And I don't know how likely it is. And in fact, by the way, you could have a completely different, Department of Justice in 6 months. You don't know. And that one might not be interested in pursuing antitrust violations on Google. Now, if I were to ignore the news, and which I think was what your question is kind of asking this pullback here, and is it a good time to enter it or not? And just look at it, then I would say Google's in no man's land, right? It is above the 200 SMA. It is below the 100 SMA. It looked like it was climbing back up towards the 100 SMA off of a low from August 5th when it hit 154.93 until the news hit yesterday. And then you get this pullback today. It's obviously much weaker than the sector, referring to an earlier question, and it's weaker than the market. But it isn't catastrophically so, and it's not dropped even down to the 200 SMA to test it. So I'm not yet sure. There's too many uncertainties for me on Google to enter the trade, and the chart isn't giving me an indication one way or the other, and that's why I would kind of just not. I would stay away until I see a reason not to. And let me just do last one or two here. Just trading options on SPY and QQQ, not necessarily individual stocks, but then I lose my advantage, right? My advantage is that relative strength, relative weakness tells me a stock is proportionally stronger to SPY or proportionally weaker to SPY. So if I'm just trading SPY, I'm losing that extra percent. So SPY goes up, I'm long SPY. Well, if I was long a relatively strong stock, that stock would have gone up proportionally more than SPY would have. And if I'm wrong and I say, oh, SPY is going to go up, I'm going to go long SPY here, and it drops, well, then I'm wrong, right? I lose on that trade. But if I'm in a relatively strong stock and SPY drops, well, it's going to be like a feather falling, and it's going to be buffered, and I have plenty of time to get out without taking any type of significant loss. So that's kind of the reason behind it. Not that I never trade SPY. I think, as you see, I do strangles at times, and at times if I think the market makers have underpriced a move, I'll do that. I did not do a strangle on SPY for the CPI this time around because I think they did accurately price the move. And then finally here on, I believe it is Shop, although I think I have another person who asked a question here on Shop, and then I think I have one on I forgot the other stock, but I know I do see one here on Shop. Okay, yeah, Shop. This is a case of stick it in here. Shop. This here is a case of what we were talking about earlier, right? Which is, do you want to be aggressive? Do you want to build a snowman? Or not aggressive, right? And so if I look at Shop, yeah, it broke above its 50 SMA here, and it has been on a nice sharp upward trend ever since its low way back on August 7th, right? So it almost came down to the 50 SMA, but it obviously well off its lows from here, bounces back up. Now you've had a pretty strong run. Look at this 80 SMA, bam. That is about as sharp as a curve you get. That plus the SMA, I would not be surprised to see this pull back towards the 8 EMA, pull back below this SMA here. I'd wait to see if that happens before, and then another retest, and then finally a breakthrough. So, a drop, a pop, another little drop, and then a breakthrough here. That is where I would look to enter. If not, and tomorrow it is above the high of the day today, then yes, you can confirm that that this gap is now full, pretty much starting to fill up, and then you can go back in. So those are your 2 points. Tomorrow above today's high of the day, or wait for the drop, pop, little drop, and then pop back above the SMA to re-enter. And that is where I would leave you. And so you have my pick of the week, which is Apple, and you have my thoughts on the market, which is where the SMA is, and look for that break of the 50. Thank you, everyone. I hope you enjoyed this. Sorry, there's only been a couple of mini rants in there, but there were a lot of questions to get to, and I wanted to make sure I get to most of them. All right, everyone, have a great week, and I will see you next Wednesday. Bye.